Ashley Vivo here, Central Oregon real estate agent with eXp Realty. I'm here today to give you guys a quick little rundown over Central Oregon's economic recovery from before the pandemic to now, and then I'm also going to wrap in a little bit of interest rates and inflation to go along with that. So, come along, let's check this out. To start off, I wanted to give you guys the good news, I guess. Central Oregon's economic recovery is doing great overall. We're doing the best out of second best actually. Deschutes County is second. Crook County is actually first in their economic recovery, which may be due probably a lot to the Facebook warehouses and data centers that are up there. So they've gained a lot of jobs in Crook County, even though it's a small area. Other than that, we're actually doing better than most places in Oregon, and which is great. So 2 years ago, we lost 1 in 5 jobs. We were hit super hard at the beginning of the pandemic. Things really shut down. We expected things to take several years to get back up to that point. As everyone knows, unemployment went to an all-time high. Things were not looking great. So that was then, and now we actually are at almost the same level of unemployment as we were pre-pandemic, and our job growth is actually way up. So we have way more people that are working right now, and part of that is because we have such a high demand, as I'm sure you've seen. Now hiring signs everywhere. I'm going to tell you a little bit about why that is. You've probably heard this before. So when the pandemic hit, people had to stop working, all of that horrible stuff happened. And part of that was a stimulus package that we were all given a little bit of extra money. There was the unemployment package that people were given a little bit of extra money for unemployment also. So combined with that extra money, some people weren't making extra, some people were just surviving still, but we also weren't able to spend the money that we were making. So those of us that were still working or on unemployment, we were getting this money coming in and we didn't really have anything we could do with it. We couldn't really go shopping, go on trips. So we saved a lot of money too. So because of that, now that the pandemic is kind of wrapping up and things are open again and people are traveling again, our demand has surged way up for what we need for workers. So it's not that people aren't working and everyone on unemployment and being lazy, which I know got talked about, a fair amount. That's not actually what's going on. What's going on is that our demand is just way, way, way up because we are such a tourism industry. So now that people are traveling here again, people are going to restaurants again, we're having a hard time keeping those jobs filled. And also, I guess those also are kind of the harder jobs. So retail and hospitality are, very hard. They're not the greatest hours. They're not always the greatest pay. They tend to be a little bit of the more difficult jobs. So those are also having a hard time staying filled. So it's not that those people aren't working. They just aren't working in those positions. And also that we just need so much more than we did even before. So that's a little bit about our economic recovery towards inflation and why that's going on. So I'm sure you've been noticing things at the grocery store, more expensive. Everything really that you need right now is more expensive. Building costs are very high. All of those things are related to inflation. And so there's a couple things that are affecting that. It's because, for one, supply chains have been massively disrupted. I don't know if you've seen, but now again in China, things are being shut down, locked down, and that is affecting a lot of our supply chains of things that we import from there. And then just here in general, things got really backed up, and then everyone was ordering everything at once everything was opened back up. So that really created some bottlenecks that we've been struggling through and struggling to get past. So that's one reason, and that's, hopefully going to get better over time, but it's not going to just disappear. So then also, because we have such a demand for workers and such a high demand for those service industry jobs and other jobs that we haven't been able to fill, that means that employers are having to offer people more money. So wages are increased. Those businesses are then recouping those costs by charging more money. Some of those businesses are also making record profits, and we don't really need to get into that, but it's not all due to workers making more money. It's also due to them and their profits. Anyway, so that's another reason we have inflation. What's going on with the housing market? Let's talk about that. So interest rates have recently increased. I know I've filled you guys in a little bit about that. So the reason that interest rates have been increased is to try to kind of stop the train from running off the tracks with all of this inflation. It's become a real problem and it's growing like crazy, and people can't afford to buy gas and to buy food and all of these other things that are really essential to our lives, and housing as well. So the Fed is raising interest rates to try to slow that down. So they want to try to stabilize, and it's a very, complicated thing. I'm not an economist. I'm not going to pretend to be, but they're trying to kind of slow things down without causing anything to crash. And when I say crash, I don't mean a housing crash like we saw in 2008. That is not what I'm talking about. Actually, interestingly enough, through almost all of our recessions, housing has continued to either stabilize and stay the same or still appreciated through those recessions. So I know our most recent one is 2008, and that's the most fresh in our mind, and we want to think that that's what's going to happen. That recession was directly related to housing. So that is, and a lot of elements of that you can watch my other videos if you want to learn more about why that happened and why it's different now. But most recessions, housing actually does not go down in value. So that's another thing you want to kind of keep in mind and keep separated. So even though interest rates are going to maybe slow the market down a little bit, really our issue right now is just supply. We just have a really small supply. We have a very large generation of homeowners or potential homeowners in the millennial generation that is just a large generation. There's just a lot of people. So we stopped building for a long time. That got us behind. And then also there's just more people right now that are wanting to buy houses. So that's causing even more of an issue. And then, let's talk about the locked in rate now too. The locked in effect. Locked in effect is, so interest rates got super, super low. They were down, 2.75, very, very low. Everyone was refinancing. Banks were incredibly busy with people refinancing and as well as purchasing because they were trying to lock in that super low rate. So the reason that that's also contributing now to even stricter and worse supply conditions is because people that refinanced or bought during that time and got a super low rate, they're not going to want to sell and then buy and get this higher rate because the interest rate really affects your monthly payment. It really affects affordability. So it's causing them even more so to not want to sell and not want to lose that locked in rate that they have. So that's part of it too. Okay, last thing that I did just mention briefly, affordability. Affordability is super important when you want to buy a house. Is it going to make sense for you financially? Are you going to be able to afford it with the job that you have? And the good news is, even though we've seen so much change in the past couple of years and inflation going up, housing prices going up, interest rates going up now, the very surprising but good news is that we are actually not that high on the affordability index right now. Historically, it's actually been a lot harder and less affordable for people to buy houses at several different points in our history, even in the past 30 years. So that's something that you should pay attention to. And I am going to post a chart for you guys to check out on that. So it does take into account median wages, median home prices, and interest rates. And they puts those all together and calculates, okay, how affordable is housing for people right now? Can most people making the median wage afford the median home price right now? And in fact, they can. So I know that seems very surprising to most people, and maybe that also has something to do with the gap in income levels, and maybe that's kind of skewing the median amount because some people are making a lot, and then there's obviously a lot of people that are not, and it's kind of spreading out even more and more. But yeah, so that's something that maybe is good news, hopefully. And also interest rates historically have been much higher. So we've been seeing record low interest rates, so it's been, hard to see them go up because it's such a big change. But it's really actually not bad, and 5% interest is actually quite good. So what I'm telling home buyers right now really is that I know it seems scary, but 5% is really not high. And worst case scenario, they go down again, refinance and get that lower rate. If they continue going up, you're going to be really glad that you bought right now. So that's my best advice for buyers right now. Sellers, it's still a great seller's market. Things might, pull back a little bit with these high interest rates. We'll have to see, but I don't see any dramatic changes. Probably the sooner the better because you're going to have a bigger buyer pool if interest rates, before they go up more. But overall, I don't really see home prices going down. I think that the appreciation is going to slow down. We're not going to have another 20% year, I don't think, and I don't hope, honestly, because it's not something that's stable and and can last. So yeah, I want to see it slow down, but continue to go up at a more steady pace. So that's kind of what I'm expecting. I hope this was helpful for you guys to see. Once again, my website, bendproperties.exprealty.com, my phone number and my name right there for you. Feel free to send me a message or give me a call, and make sure to go sign up at that website and follow me here. All right. Thank you guys.